use a balance sheet in accounting? A balance sheet is one of several financial statements. It is used to present a business's financial position at a specific point in time. So let's talk about the elements of a balance sheet. A balance sheet reports assets, liabilities, and equity. And so if you put all that together, you come up with the business's financial position, and the balance sheet specifically is reported on a specific date. So it doesn't cover a period of time. And so you could generate a balance sheet for a business at the end of the year, and it'll tell you how much cash they had in the bank, what assets they owned. So if they had machinery and equipment, it'll show the value as of that date. And that's the asset section. The next section would be liabilities. The liability section shows how much is owed on credit card balances. If you have any lines of credit, how much is owed on those. If you have any loans or mortgages, those would all be reported again as a snapshot on that day. The third section of the balance sheet is the equity, sometimes called owner's equity for a business. And that essentially is the net of the assets and liabilities. And what I mean by net is if you take the assets and you subtract out your liabilities, you're left with your equity. And equity is essentially if you were to liquidate the assets and liabilities against one another, what do you have left over? And that's pretty much the balance sheet in a nutshell. Now, the way that accounting works is every financial transaction within a business is usually coded to one of five categories. Of those five categories, three of them are on the balance sheet, which are the three that we just discussed: assets, liabilities, and equity. The other two categories are income and expenses. Income and expenses are reported on the income statement, sometimes referred to as the profit and loss statement, and that's usually presented using a time frame. So we don't generally look at a P&L as a snapshot in time. We'll look at it as a period of time. So an income statement or P&L can look at the entire 2020 calendar year. So from January 1, 2020 to December 31, 2020, how much income and expenses did the business generate? It shows the business's operations, not what's actually owed. It shows how much money came in and how much money went out in terms of generating revenue and paying for expenses.